This is the only video that you need to watch if you're a beginner and you want to get started trading Forex. And I'm going to be breaking everything down in a very simple way so you can understand it. So even if this is your first time of hearing about Forex trading, you'll be able to understand it. For those new to the channel, my name is DanFX and I've been trading Forex for about 5 years now, since I was 16 years old. And throughout that 5 years, I've been through all the ups and downs, I've been through the failures, I've been through the success. And Forex trading is what has given me the ability to become financially free at just 21 years old. So by the time you're done with this video, you will know exactly everything you need to know and do in order to start trading Forex as a complete beginner. So without wasting any more time, let's get started. I'm going to be showing you how to start trading Forex as a complete beginner with zero experience. So even if you don't know anything about Forex trading, this is your first time of hearing about Forex trading and you want to learn how to trade Forex, you want to get started as a newbie, as a complete beginner, this video is for you, and make sure you stick to the end of this video and pay close attention, because there are some things that you might hear that might sound confusing. If you don't pay attention, then you're going to miss it and you're not going to understand it. So in order for you to understand it properly and to get started the right way, you need to pay close attention to this video. Cut out all distractions and pay close attention. Right? So let's get started. Now, what exactly is Forex trading? Before I can show you how to get started trading Forex, you need to understand what exactly is Forex trading. Now, Forex trading is basically the buying and selling of foreign currencies. Currencies like the GBP, the Euro, the dollar, Japanese yen, Australian dollar, Naira, but we don't actually trade Naira inside. I'm going to explain that later. Right? So Forex trading is basically the buying and selling of foreign currencies. You buy one currency and you sell the other currency. That is Forex, right? And Forex, the word or the term Forex simply means foreign exchange. The short form of Forex, the short form of foreign exchange means Forex, right? So Forex, foreign exchange, Forex, foreign exchange. That's why it's called Forex, right? So, like I said before, an example is exchanging your euro for dollar. So, if you exchange your euro for dollar, you just engaged in foreign exchange. You just engaged in Forex. You exchange for your dollar for euro, you just engaged in Forex, right? And for those of you that live in Nigeria, if you exchange your Naira for dollar, you just engaged in Forex, foreign exchange. You just exchange your Naira for a foreign currency, which is the USD, the dollar. So that basically is what Forex is. So what we are doing is Forex trading. So when it comes to trading, when you apply trading to the foreign exchange, that is buying and selling. What exactly is trading? Trading is buying and selling. So when you say trading Forex, it means you're buying and selling foreign exchanges or foreign currencies, basically. Right. So to briefly explain how it works and so that you can simply understand the way it works, because if you go on YouTube, there are a bunch of videos out there. Some of them, most of them are usually very confusing. So make sure you pay close attention. Let me explain it in simple terms and in a very simple way for you to understand. So let's say you live in Nigeria and you're using the currency of Nigeria, which is Naira, right? Naira, using Naira, and you want to change your Naira to dollar, right? There's going to be an exchange rate. There's going to be a price that you're going to change that Naira to dollar. Most of you know this. Most of you that live in Nigeria, also in other countries, if you want to, there's always an exchange rate if you want to convert your local currency to a foreign currency. There's always an exchange rate. So, for example, let's say you live in Nigeria and you're using our currency Naira, and you want to change $1 to Naira, right? So $1, if you go on Google and search $1 to Naira, it's going to give you what $1 is, the equivalent of $1 in Naira. So $1 in Naira is about 1,500 Naira, right? So approximately, just for ease of calculation, let's say 1,500 approximately, right? So 1,500 Naira would give you $1, right? So that means that the exchange rate for Naira to dollar or for dollar to Naira is 1,500 Naira. So if you want to change your Naira to dollar, you need 1,500 Naira to give you the equivalent of $1. And if you want to change $1 to Naira, $1 will give you 1,500 Naira. So meaning the exchange rate is 1,500, right? So to buy $1, in order for you to buy $1 with Naira, if you want to buy $1, you need 1,500 Naira to get $1, right? And if you want to sell your $1, when you sell it, you're going to get 1,500 Naira. That is basically how Forex trading works. Most of you know this already. Most of you have seen this. Most of you know and understand this, just that you get confused when you see the term Forex and you don't know exactly what it is. This is what it is, right? So another example, let's say you buy $1 at 1,500 naira. That's the exchange rate at 1,500 naira. So 1,500 naira gives you $1. Then maybe 1 month later, 2 months later, 3 months later, the exchange rate goes from 1,500 naira to 2,000 naira. So basically, it means that that $1 is no longer valued at 1,500 naira. That $1 is now 2,000 naira. Right. So if you have $1, that $1, if you change it to naira, is going to give you 2,000 naira. Right. So let's say you buy $1 at 1,500 naira, and then 1 month later, the exchange rate goes from 1,500 to 2,000 naira, and then you want to sell your dollar to naira, right? You want to change this $1 to naira. The value of your $1 is no longer 1,500 naira, it's now 2,000 naira. So when you change it, it's going to give you 2,000 naira, right? So when you sell that $1 at an exchange rate of 2,000, your profit is going to be 500 naira. That's exactly how forex trading works and how we make money from it. So why is your profit 500 naira? Because when you bought it, the exchange rate was at 1,500 naira. Now, 1 month later, 2 months later, 3 months later, the value of this has increased. The price the price that you bought it is 500, 1,500, and then the price has gone away from that 1,500 and increased to 2,000 naira. So if you sell it, you're selling it at a profit of 500 naira. This is simple math, right? You buy a shoe at 500 naira, and then later the price of the shoe is now 1,000 naira. When you sell it, your profit is 500 naira, right? Basic math, basic secondary school math, right? So that's exactly how forex trading works. When you buy a currency and the price of that currency increases, you make money when you sell it, right? That's basically how forex trading works. So we do this on the trading platforms, right? So normally, if you want to do forex trading, right? If you want to convert your naira to dollar, in the old way, you have to, like, let's say you travel, or you have to go to an exchange. But let me just use a good example. Let's say you travel abroad, right? You have to change your local currency to the currency of the country that you're going to. Let's say you're going to the US, you carry your naira, you travel to the US, you have to change your currency to naira, sorry, to dollar. There's going to be an exchange rate, right? That's exactly is you're participating in foreign exchange, Forex, right? So now we do this, we don't now if you want to do this, you don't have to be traveling around and going to exchanges. You can do this on trading platforms, right? There are platforms that you can get started with. Um, Start trading right with your phone, on your laptop, and on your mobile phone. All you need is just internet connection, and then you're good to go. All right. So if you buy a currency and the price of or value of that currency goes up, we make money. If you sell a currency and the currency value of that currency goes down, we also make money. Right. But if it goes against what we predict or expected, then that's when you're going to lose money. That's when you're going to lose money. Right. So what exactly are currency pairs? This is the next step. This is our next thing that you need to understand. Once you've understand how forex trading works, now I've explained it for you, right? So let me just give you a brief diagram explanation or artistic explanation. So that you can understand it, an image um perspective. So let's say you buy a currency at a certain price. Let's say, for ease of calculation, let's say at 1,500, right? This line indicates the price that you bought it, and then the price of what you bought now goes all the way up like this to this point here, where the price is now maybe the price is now 3,000, right? Let's say the price is now 3,000, and then you sell it at this point here. What's your gain? What's your gain? That's 3,000, right? Minus the 1,500, the original price that you bought it. That's going to give you 1,500. So your profit is going to be 1,500, right? That's how forex trading works basically. Right? So you bought it at this price went up, and then you sold it at this price. Your profit is the difference between this and this. All right? And then let's say a different scenario where you lost, right? So let's say you bought it at this price, and instead of price going up, price ended going back down, and then the price you bought it was at 1,500, and then the price it's at now is maybe at 1,000, right? So now that's you lost 500, right? So you're at a minus 500 on this particular trade, right? So that's how forex trading works. If it goes in your direction, you make money. If it doesn't go in your direction, that's when you start losing money, right? And that's the way forex trading works. Also goes for the sell side. If you sell and the price of the value of that currency goes down, all right, so you're predicting that it's gonna go down. So if it actually goes down according to your prediction or expectation, then you make money. If it goes up, then it goes against you and you lose money, right? So what you need to understand now is what are currency pairs. Now, in forex trading, we trade currency pairs. Basically, a currency pair is just basically the pairing of two currencies together. The euro with the dollar, as you can see here as examples, the euro with the dollar is called a pair. You're pairing them together. This simple English, right? You're pairing them together. A pair is two, right? So this and this paired together is a currency pair, right? The term already explains itself. Currency pair, basically. All right. So a couple of examples of currency pairs that we trade are Euro USD, GBP USD, which is the pound USD, dollar USD, um, dollar JPY Japanese yen, right, and more. There are more than this, but these are just the basic ones for starting. All right, so Euro USD, GBP USD, USD CAD, USD JPY. There are also other currency pairs like the Australian dollar, AUD, Australian dollar, that's AUD. There's the New Zealand dollar, NZD, New Zealand dollar. So we trade all those currencies too, and we trade them in pairs, right? And the reason why we trade them in pairs is what I'm going to be explaining later on in the video, right? Is because it's an exchange. So when you're buying one currency, you're going to automatically have to be selling one currency. So basically, if you're buying euro, you're automatically selling USD. If you're buying GBP, you're automatically selling USD because it's an exchange, right? If you're buying USD, you're automatically selling CAD. If you're buying USD here, you're automatically selling JPY, and it goes the other way around too. If you're selling euro, you're automatically buying USD. If you're selling GBP, you're automatically buying USD. If you're selling this USD, you're automatically buying CAD, right? So it goes like that mainly because let's say you're buying on this one, you're buying this and exchanging it and selling this one, right? At an exchange rate, bid and ask, basically. So we have the euro, the USD, the AUD, JPY, and CAD. We have also other currencies out there, right? So here's an example of what I just explained. This is a euro, and this is called a base currency. So the first one is called the base currency, right? This is called the base, and the second one is called the quotes. So when you're buying the base, you're automatically selling the quotes. You're gonna see this when you start trading. You're gonna be seeing this. Yeah, there's gonna be a price. Maybe it could be like 1.0956, something like that. That's gonna be the price that you're gonna be selling and buying, right? Buying and selling, bid and ask, right? So the base is the first currency and the quote is the second currency. This is very important to know when you're trading Forex because there's sometimes some people might mention this. So you need to know what they are talking about, right? Also when you're trading. So so the base currency and the quote currency. Now this is the price for selling and this is the price for buying. They're not always the same. So the price for selling is not the price for buying. There's always a slight difference between the two, right? They're not exactly the same every time, right? Also, if you live in Nigeria and you're into like selling and buying, maybe changing your naira to dollar, changing your dollar to naira, you're gonna notice that the selling price is gonna be different from the buying price. Just slightly different. It's not like a significant difference, but there's gonna be a slight difference in the buying and selling price, and that's called the bid and ask. The bid is the buying, so this is you can call this bid. So anywhere you see bid, just know it's buying, and anywhere you see ask, that is selling, right? Right. So bid and bid and ask, bid and ask, right? So that's what it means. So the selling price is going to be different from the buying price. So the sell price, buy price. So when you buy a currency pair, you're buying the base and selling the quote automatically. So when you're selling the base and buying the quote automatically. That's what I just explained. And the reason for that is because it's an exchange, you're buying and selling, right? It's a market. You're going to be buying and selling, right? And also one thing to also note is when you see exchange rates, the prices are the exchange rates, right? The rate at which you're selling, this is the price, and the rate at which you're buying, this is the price. So those are the exchange rates. So now, before you can start trading Forex, you're gonna need you're gonna need to create a trading account. Right? You're gonna need to create a trading account, and these are the apps that you're gonna need to download to get started. You can't start trading without these apps. You need these apps. This is a must. You must have these apps to trade. These are the most popular apps that people use to trade. Now you can get them either on your mobile or on your desktop. For trading view, I recommend this one. Get it on your laptop or your desktop, right, or on your tablet, whichever one you're using. And on the MetaTrader 5, I'll say get this on both the laptop and the mobile, but mostly on the mobile. So the way people usually do this is most people use this one on the mobile and most people use this one on the desktop or tablet, right? Because of the big screen, right? So get the two. The two are important. This is what you're going to be using to look at the chart and also place trades. This one is most people usually use them for just placing trades, right? Most people use this one for just placing trades, while most people use this one. Sorry, most people use this one for just placing trades, the MetaTrader 5, and most people use this other one, Trading View, for analyzing the charts. So that's basically how it works. All right, so make sure to get these two apps on your mobile and on your desktop. Those are very important. So these are steps on how to open the trading accounts, right? So I'm going to be showing you how to create a trading account. So once you've gotten these apps, once you've downloaded these apps, then you're going to need to create a trading account and then connect it to these apps here. Basically to this one. You're going to connect it to this one, all right? So when you create the trading account, pay attention. When you create a trading account, you're going to connect it to your MetaTrader 5 platform. That's what you're going to be using to trade. So let me show you how to create and open a trading account. So first step you need to open an account with a broker, all right? And it's going to be either a demo or a real account. For starting out, you start with the demo account. Then when you're ready, you start with a real account. You trade with a real account, right? So the demo account is basically you trading. The demo account is basically you trading virtual money. So it's not actually real money. It's like a practice arena, a training ground, training wheels, training ground where you're going to be trading on virtual money. The money is not real on the demo account. Any money you see on the demo account is not real money. You cannot withdraw it. You cannot use it to do anything. There are just numbers on the screen that it's like a simulation. It helps you to simulate a real trading environment while trading on fake money without actually risking your own money on the table, right? So that's what the demo account is for, and people use it for practicing and getting used to the platform. And then when you're ready, once you have a strategy, once you know what you're doing, then that's when people move on. But that's when you can move on to a real account and test the waters and see. This is where the money is made, basically. This is where the money is lost and where the money is made on the real accounts. This is where you're going to have to deposit and trade, right? And any money you make from there, you can withdraw, unlike the demo accounts. So now, you might be wondering, why do you need to create an account with the broker? Why can't you just use the MetaTrader 5 and just create an account there? The only thing you can do there is create a demo account. If you're going to create a real account, you're going to need a broker. All right. This is a must. It's like a what they call this? Is it an exchange platform or something? All right. That's where you're going to be depositing your money and then creating your account. That's basically how it works, right? So if you want to create an account with the broker, you're gonna have to use a reliable broker. And if you want to use the broker that I use to trade, the link is going to be in the description to open an account with the broker. The name of the broker is called XNES. XNES, that's the broker that I use to trade. All right. And then once you've created an account, I'm going to be showing you how to create an account. Don't worry. I'm going to be showing you the steps in case you have any questions on that, or maybe you don't know how to go through the process. I'm going to be showing you how to do it step by step. All right. So once you've done that, once you've created the account, you're going to need to connect your broker account to your MetaTrader 5 platform. You're going to need to connect it to your MetaTrader 5, right? That's basically how it works. Now let me show you how to create an account with the broker. So if you click on the link in the description below, it's going to take you to this page. It's going to take you to this page where you're going to have to create an account. So you can see if you already have an account, you sign in, but since you're new to the trading and you want to create an account, you're going to click on create an account. You're going to put the country of residence. So if you live in Nigeria, just put in Nigeria. You're going to see Nigeria there. Put in your email address. Let's say example at gmail.com. Then you're going to put your password, and then the password has to have at least 8 to 15 characters, at least one capital letter, right? One number and one special character, right? So once you're done with that, then you click on continue. When you click on continue, you're going to create the account. So your account is going to be created. Once you've created the account, it's going to take you to this page. This is going to be your dashboard for your account. If you look to the top part of your screen here, you're going to see your account balance. If you deposit money, you're going to see your balance here. And you can also you can see if you look at my account, you're going to see there's real account and there's demo account, right? So you can create a real account here, you can create a demo account here. So let's say you want to create a real account, then you click on real account here. Let me just go back so you can see it clearly. So let's say you want to create a real account. Now pay close attention. If you want to create a real account, you go here to this yellow button here and click on open new account. When you click on open new account, you're going to see there are different types of accounts that you can create. Also, if you look at the top part of your screen, the top right part of your screen, you're going to see MT5. You click on it, you can choose MT4 or MT5. All right, so there are two platforms, MT4, which is MetaTrader 4, and MetaTrader 5. But the recommended and the one that most people use is MetaTrader 5 because it's the updated version of MetaTrader 4. MetaTrader 4 is more like an old school type of it's an old school platform basically. So you have more features and more flexibility on the MetaTrader 5. So leave it on MetaTrader 5. If it's not set to MetaTrader 5, set it to MetaTrader 5. Now, on the types of account you're going to see here, there are different types of accounts, right? And you can see on this standard account, which is the recommended for most people, starting out, right? The minimum deposit here is $10, right? So if you have $10 or more, you can deposit here and trade, right? If you have less than $10, you cannot open an account. You need to have a minimum $10, right? If you want to go to the other account sizes, sorry, the other account types, you're going to see this one, like the pro account with zero commissions, low spreads, and instant market execution. You're going to see you have minimum deposit of $500, also raw spread, minimum deposit of $500. And then if you want to deposit on this one too, minimum deposit of $500. And then this one, standard cents account, minimum deposit $10. Right. So you choose the one that suits you. If you want to start with, if you want to test everything, you can just start with a $10 account. If you're good to go, maybe you've learned or maybe you've spent time in trading and you're not good, you have a strategy and you know how to make money trading Forex, then you can go with this one. Or maybe if you have a minimum deposit if you have more than $500, you can go with the pro account. Now, if you want to create a demo account, it's actually the same process. You click on demo here, click on open new account. You're going to basically choose the same thing. So with the demo account, you can actually test all these account types and see how it is, right? So that's how to create a demo account and that's how to create a real account. So let me just create a demo account here so you can see. So open demo account, let's choose standard account. Let's click on continue. All right. You're going to choose the currency, the account currency that you're going to use. You can set the leverage to whatever leverage you want. All right. You can set the leverage to whatever leverage you want. Don't forget to click this, set this to demo. Don't keep it on real. Set this to demo here. All right. Let's say starting balance. Let's say let's say $1,000, just for an example. All right. Standard accounts, account nickname. You can set the name of what you want to set it to. Let's say Dan FX example. All right. Then you set whatever password you want to set. Let's see. Right. So then you create an account. You click on create an account here, and then it's gonna automatically create the account. So you can see the account here has been created. So you can see demo account MT5 standard. Right. So the standard is the type of account that you created. This is a demo account, right? So you can see the name of the account here, the account number, and the account balance that we put inside the account. So now if you wanna log into your MetaTrader 5 platform, what you're gonna do is you're gonna click on this button here. You can see these three dots. You click on it and then go to account information. When you go to account information, you're gonna see your server, right, and your MT5 login. Also, remember the password that you put on the account. Make sure to save the password. Don't let the password disappear. Save the password. Write it down somewhere. Save it in a secure place, right? Keep that one because they're not going to show you the password here. So the things that you're going to need to log into your MetaTrader 5 platform is you're going to need your server, this server here. You're going to need your account number, MetaTrader login, this one here, and then on the MetaTrader 5 platform, if you click on open an account, then you're going to see it's there to put those details in and log in to your accounts, right? So once you've created an account here on XNest, then you log in to your accounts on your MetaTrader 5 platform, and you're going to see the account balance there. I'm going to put the link in the description on how to connect your accounts, how to connect your XNS account to your MetaTrader 5 platform in case you're confused on how to do that. The link is going to be in the description of this video. So make sure to check that out if you have any, if you want to check, if you want step-by-step guidance on how to create an account and connect it to MetaTrader 5 platform. You're gonna see it there. All right. So this is how to create an account. If you want to deposit, simply click on deposit here, and then you're gonna see the different deposit methods. You can use bank transfer, bank card, all this other stuff here. Crypto. You can use crypto to deposit. Also, if you want to withdraw, it is actually the same deposit methods you're gonna see there. So let's get back to the slides real quick. Right, so now that we've found out, we know how to open an account. The second step is connect your broker account to your MetaTrader 5 platform. Also, the link is going to be in the description of the video to connect to on how to connect your broker to your MetaTrader 5 platform. Right. So now the next thing that you need to understand is what is a PEEP. This is important to know. This is a term that you're going to hear a lot when you're trading. You're going to also be using when you're trading. It's very important that you know what a PEEP is. PEEP or pips are used to measure the change in price or value of a currency, right? So if the price changes from one point to another, we use the pips as a way to measure that change, right? So they're usually the fourth decimal in the currency value, and on JPY pairs, they're usually the second decimal in the currency value. Now, this might sound confusing to you. Let me just explain. Let me just explain what it means, right? So let's say, for example, price. Let's say this is price here, right? Let's say you bought from these points here, and then price goes all the way up to this price here, right? The distance from this point to this point is going to be measured in pips, right? It's going to be measured in pips, right? It's just like saying, let me use a real world example. Let's say a car moved from this point all the way to this point. How do you measure that change? How do you measure that distance? You measure it in kilometers, right? You can measure it in kilometers. So how many kilometers did the car move from here to here, right? In Forex, we use pips. So basically, how many pips did price move from here to here? How many pips is that? Then you measure the pips and see how many pips it is, right? And then where this comes into play, right? Where this comes into play is when you're trying to measure the pips, right? So when you're looking at price, for example, let's say Euro USD, this is how the price is going to look like. You're going to see 1 point something or 2 point something or whatever. You're going to see the price there. And then the fourth decimal, you know what a decimal is? After the dots, after this basic math, basically. After this, the decimals, these are the decimals. So how many are here? There's 1, 2, 3, 4. This is the fourth decimal here. So that's the PEEP. Right, this is the PEEP, the fourth decimal. So we have 1, 2, 3, 4. So this is the PEEP. This is 0 is the PEEP. So now, how do you measure the PEEPs? Right, so when you carry this minus or plus or minus, whatever, and then let's say you put another number here, maybe 1.24655, right? And then you minus it, so you're gonna see when you do it on your calculator, you're gonna see how many pips that is. You're gonna see the number here, right? So on JPY pairs are structured in a different way. It's the second decimal. JPY pairs are not like this. They're usually measured in like, let's say 150.876 or something, right? While all the other normal currency pairs are like 1 point something or 2 point something, right? You're gonna see this when you're trading, right? So here's an example of this, right? This is normal pair, USD pairs or cross pairs, and then JPY pairs, right? JPY pairs are structured in a different way. So you can see this number here. So you can see 1.54506. What exactly is the PEEP? If you count the decimals, you can see 1, 2, 3, 4, 5. 5 decimals. So the PEEP is the fourth decimal, which is this one, right? That's the fourth decimal. The fourth decimal. While on JPY pairs is the second decimal. So if you count this, it's going to be 1, 2, 3. Right. This second decimal is the PEEP. So this 4 highlighted in red is the PEEP, the second decimal on JPY pairs. Right. So here's an example on how to measure the change in price or value of a currency using pips. So let's say if the price of let's say the price of Euro USD moves from 1.2550 to 1.2551. So how do you measure the change, right? You use this minus this. So 1.2551 minus 1.2550, that's going to give you 0.0001. So that means price moved by 1 pip. Why? Why does it move by 1 pip? Because if you look at this, if you count it, it's 1, 2, 3, 4, right? That's 4. So price moved by 1 pip. That's usually how you calculate it. So this is just a basic example of how to calculate the pips. You calculate the simple mass. So if price moves from here to here, how do you measure the pips? You calculate, okay, what price is this? Let's say this is 150, this is 150, and then this is 50. Like I explained this in the previous slides. So price moves from here, from 50, price moves from 50 to 150, right? So what is the difference from here to here? This is 100. So because if you do 150, so you use the after price to minus the original price. So that's going to be 150 minus 50, which is going to give you 100, right? 100. So how many pips did price move from here to here? That's going to be 100 pips, right? So this just, I'm using numbers like this to make it easier for you. So basically, replace these numbers with the way these numbers are, carry this and put it here, carry this and put it here or something, right? So no, basically, let's say we have these points here, price move from here to here, right? I'm using this to make it very simple for you because if you go on YouTube, those things are usually very confusing. So let's say if price of Euro USD moves from 1.2550 to 1.2551, right? So how are we going to measure this? So let's say this is where price started from. Price moved from 1.2550 all the way to 1.2551, right? So with the example that I just gave you, how do you calculate how many pips this went? You do, okay, this is equals to 1.2551 51. Don't mind my drawing, minus 1.2550. Calculate everything. It's going to give you 0.0001, 0.0001. Right. So how many pips the price move from here to here? You move by 1 pip. Right. That's basically how we calculate pips. Right. Simple math. So that's very important for you to understand. Now, the next thing that you need to understand, which is another term, which is very, very important, especially when you are trying to take a trade. You're going to see this on your MetaTrader 5 platform when you're trying to take a trade. It's called lot size. What exactly is lot size? What's a lot size? Lot size, it actually explains itself. The term explains itself. Lot size. Basically, it's the size of the currency that you want to buy, right? So if you say, okay, you want to buy USD, what size do you want to buy? You want to buy GBP USD, what size do you want to buy? If you go to the market and you say, okay, you tell the person that's selling, let's say you want to buy, let's say you want to buy what would I use as an example now? Let's say you want to buy, uh, let's say you want to buy, I'm looking for something that has quantity. Let's say you want to buy yam. Let me just use yam as an example. A 2 bar of yam. Let's say you want to buy yam, right? You go to the market, okay. You ask the person, okay, I want to buy yam. The person asks you what size or what's the amount that you want to buy? Do you want to buy one? Do you want to buy two? Do you want to buy three? Do you want to buy four? Do you want to buy five? Do you want to buy 10? Do you want to buy 20? Right. So it's like the same thing in trading. Okay, you want to buy your USD. What size do you want to buy? You want to buy GBP USD. What size do you want to buy? Okay, you want to sell this. What size do you want to sell? So that's where your lot size. That's your lot size basically. Right. So lot size is basically the total amount of units of a currency you want to buy or sell. Right. So there are different lot sizes. There's 1 lot, there's 2 lots, there's 3 lots, there's 0.1 lots, 0.2 lots, 0.3 lots. There's 0.01 lots, which is the lowest. There's 0.02. There's 0.03. All right. So there are different lot sizes that you can choose from. But the standard lots, when you hear a standard lot, it basically means 1 lot. One lot is basically equals to 100,000 units of a currency. So mini lots is basically 0.1. That's a mini. Mini lot is basically 10,000 units of a currency. Micro lots is basically 0.01, which is basically 1,000 units of a currency. Nano lots, this one, not all brokers accept this, unless maybe you're trading a cents account, as you saw on XNES, a cents account, which is, you know what cents are. A cents account, very, very small account, right? The figures are in cents. That one, that's where you can see, probably you can see 0.001. But on most brokers, on most accounts, the lowest is 0.01. So don't you get confused. Don't focus too much on this one. It's not every platform that you're going to be able to use this, but the lowest is micro lots. So let's briefly go over that again. What is a standard lot? A standard lot is 1, 2, 3, and above, right? Mini lots are basically 0.1, 0.2, 0.3, and above, all the way till you get to 1, right? Micro lots is basically 0.01, 0.02, 0.03, right? So lot size is basically the total amount of units of a currency that you want to buy or sell. And this also determines how much money you're going to make on that trade, how much money you're going to lose on that trade, right? It's a size. So a lot size is in Forex is the number of currency units you're trading. It controls how big or small your trade is. So the more lot size you have, the bigger the trade is. The smaller the lot size, the smaller the trade, basically. The bigger the lot size, the more money you can make or lose with each peep movement, right? So if you have a big lot size, if price moves a little bit of pips, the amount you're going to be seeing, the dollar amount is going to be larger than if you have a small lot, right? Basically, that's how it is. So basically, to explain this in real life terms, if you buy 5 tubers of yam, if you buy five tubers of yam at 500 naira, that is basically 2,500, right? 2,500. And then let's say price of 5 tubers of yam goes from 500 to 1,000, right? So basically, that 5 tubers of yam that you bought, let's say each yam is now 1,000 naira. It's no longer 500. So now what's going to happen to the amount of money that's going to be there? It's no longer going to be 2,500. It's not going to be 5,000, right? So let's say you bought it at this price at 500 naira each, and then you sold this at 1,000 naira each. What's going to be your profit? Your profit is going to be 2,500, right? Your profit is going to be 2,500. And the reason why it's much like this, the reason why it's large like this is because you bought five. If you reduce it to four, if you bought four, or let's say you bought three, obviously the amount of money you're going to make is going to be less, right? And the amount of money you're going to stand on losing is going to be less also, right? So that's basically how lot sizes work. The bigger the size, the bigger profit or loss you can make, and the lesser the size, the lesser profit or loss you can make. I'm just using real life examples so you guys can understand because, like I said before, like I keep on saying, most of the videos you're going to see on YouTube are going to be very confusing. I remember when I first started trading Forex, when I was learning lot sizing and pips and leverage and all the stuff, the way they were explaining it was so confusing that I was like, what's this? I don't understand this. So that's why I'm putting it in real life scenarios or real life examples so that you can understand this clearer. Don't mind my English, clearer, so you can understand it better, basically. So, because most of us we actually do all these transactions in real life, we buy and we sell. So forex trading is still the same thing, buying and selling. So it shouldn't be too confusing to understand this concept. It's the same thing that we do on our day-to-day life, but in different terms. So it's the terms now that starts confusing you, and start thinking, oh, what's this, what's that, because of the different terms that you've not heard before. So you're getting new to the terms. So I'm just putting it in a way that you can understand it. Now, I used five tubers of yam to explain this. So now let's say you use the smaller amount. So let's say you bought just one tuber of yam at 500 naira, right? So basically, that's going to be 500. If the price of one tuber of yam goes to 1,000, and then you sold it at that 1,000, what's going to be your profit? Your profit is going to be 500 naira, right? So you can see because it's just one, your profit is now only 500. But when we, yeah, sorry about that. But when we used five, right? When we bought five and sold the five at 1,000, our profit was what? Was 2,500, right? So because the size is more, your profit is going to be more. Because the size is less, your profit is going to be less. Do you understand? So if your lot size is if your lot size is big, the trade is going to be big, and the profit you're going to make on that trade is going to be big. Also, if the trade doesn't go in your direction, the loss you're going to make on that trade is going to also be big. But if the size is small, the profit you're going to make on that trade is going to be small, and the loss you're going to be making on that trade is going to be small because it's still the same buying and selling. You're buying and selling. That's basically what it is. You buy at the price goes up, you sell, you take your profit. Basically, that's it. You sell, price goes down, you buy, take your profit, right? So a standard lot, like I said, is 100,000 units. If you're trading one standard lot of your USD, you're basically trading 100,000 euros, right? You're basically trading 100,000 euros. Each pip is worth $10 on a one lot on a standard lot. Each pip is worth $10. So basically, what this means is the value of each pip on a 100 on a one lot. So remember, one lot is basically one like this. A standard lot is basically one like this. That's what I mean. A standard lot is basically one like this. It can also be two, three, or four, all the way up to 10. Right? Remember, like I explained in the previous slides. Like, let me just go back there. Remember, a standard lot is one, two, all the way up to 10. Mini lot is 0 0.1, 0 0.2, all the way up to 1, right? So here, like I said, standard lot is 1, 2, 3, 4. And when you're using a standard lot, each pip is worth about $10. So basically, if price moves 10 pips, and each pip is worth $10, right? So that means if you use a standard lot and price moves 10 pips, what's that going to be worth? If each pip is $10, so this is going to be $100 because each pip. So if one pip is equals to $10, so 10 pips is going to be equals to what? $100 because 10 times 10 is 100, right? So if you're using a standard lot and price moves 10 pips in your favor, you're going to make $100. If price moves 10 pips against you, you're going to lose $100, right? So now let's say you reduce your lot size from a standard lot and you go to a mini lot, and a mini lot, we know that a mini lot is 0.1 or 0.2 all the way up to you know what, right? So now on this one, because the units are smaller and the lot size is smaller, each pip is no longer worth $10, it's now worth $1 on a mini lot. So that means if one pip is equals to $1, 10 pips is going to be equals to $10. So if you use a mini lot, and price moves, let's say you use 0.1 lots, price moves in 10 pips, you're going to just make $10, right? You're going to make $10 because the size is smaller than the standard. The mini lot is smaller than the standard lot. That's why it's only $10. Now, also to not confuse you when you're trying to trade, if let's go back to the standard lot. Let's go back to standard lot. So let's say you use one standard and price moves 10 pips. That's going to be $100 because each pip is $10, right? So now, what happens when you use 2 pips? This is where some of you might get confused. What happens when you use 2 pips? You just do all these things times 2, basically. So 2 pips, 2 pips means each pip is going to be worth $20 on 2 lot size. Each pip is going to be worth $20. So that's $20. 20 if price moves 10 pips, you're gonna make, instead of $100, you're gonna be $200. So basically, just times this times 2, times everything times 2, basically. All right. If it's 3 pips, that's basically everything times 3. If it's 4 pips, that's everything times 4. Right. Same thing goes for the mini lots. If it's 0.1, 0.2 is going to be everything times 2. 0.3 is going to be everything times 3. That's basically how it is. All right, simple math. So micro lots, you know what micro lots is? Micro lots is 0.01. So 0.01 for 10 pips is going to give you, sorry, for 1 pip is going to give you $0.1. So 10 pips is going to give you $1. So if price moves 1 pip, if price moves 1 pip, it's going to give you 0.1 dollar. And then if price moves 10 pips, it's going to give you $1, basically. All right. So I hope you don't get confused by this. If you're confused, rewind the video, watch it again, so you understand it. It's basic math. So now, another thing that you need to understand is types of analysis. What are the types of analysis that we have? There are two types of analysis. There's technical analysis and fundamental analysis. Now, what exactly is technical analysis? Technical analysis deals with using technical such as things on the charts like candlesticks, lines, graphs, drawings, and other chart data to try to analyze and predict the future of the price of the currency. All right. So technical analysis is most of the chart stuff that you see, most of those chart stuff, the graph. So like the chart stuff like this, maybe you draw a line and then like I don't know if some of you have seen those lines and all the stuff on the charts where you see they're just drawing lines and all that to try to predict the price of where the future price of the currency. Right, so that is basically technical analysis. You're using chart data, prices, candlesticks, patterns, drawings, graphs to try to analyze and predict the future price of a currency. Now, that's technical analysis. You're using technicals. Fundamental analysis deals with using news and world events and changes to analyze and predict future price movements and direction. Basically, you're using things like maybe like Donald Trump or elections or diseases, world outbreaks, lockdown, all those like things that go on in the world. Now, sometimes it might be the whole world, sometimes it might just be related to that country specifically. So, for example, if it is something that's USD, if it's USD, right? You're dealing with USD, and then you're in Nigeria and something happens in Nigeria, it's not going to affect the USD. It's not. It's not. Because it has nothing to do with the currency, it has nothing to do with the country that owns the currency. So it has nothing to do with the currency. But it's going to be different when something happens in the US. Something happens to the US, it's going to affect the USD, right? So it's going to cause it to either go up or go down. So by understanding those data, those news and events, is it a positive news? Is it a negative news? If it's a positive news and it's good for the currency, it's positive for the currency is going to go up. If it's a negative news, the currency is going to go down. So for example, if you're using Naira in Nigeria, you're using Naira, right? And is that how N works? Is that how N is? Yeah. If you're using Naira in Nigeria, and something happens in Nigeria, a nationwide event or something, or politics or so, whether it's positive or negative, that's when you're going to know if it's going to affect the Naira or not, right? It's not going to affect USD, it's not going to affect JPY, it's not going to affect any other currency. It's only going to affect the currency of the nation that is affected. So if something happens in China, then you just know that JPY is going to move in either up or down. So that's how you use fundamental analysis and news and world events to analyze the charts, right? So there's technical analysis and there's fundamental analysis. Most people are usually technical traders. Some mix the two together. Some usually one, some usually fundamental. You choose the type that you want. But for starting out as a beginner, start with technical analysis. Don't go yet till you're advanced. If not, you're going to just get confused. All right. So start with technical analysis. Then maybe later on you can add this if you feel like you need to add it or not. Now, you need to go to the next step, which is very, 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 very important, which is Japanese candlesticks. These are the things that you're going to be seeing on the charts. Without this, you can't really do any technical analysis accurately. You can't really do any technical analysis at all without understanding candlestick. So they are called Japanese candlesticks. I don't know why they call that. Maybe the Japanese invented it. I don't know. But it's called Japanese candlesticks, right? So there are usually two main colors, green and red. Sometimes the green, some people paint it blue. Sometimes some people change the colors of the candles, but uh, normally on default it's going to be green and red. The green means price is going up, obviously. The red means price is going down. So they're also called bullish and bearish. All right, so bullish Bullish means price is going up. Bearish means price is coming down. So you're gonna see those terms. You're gonna hear all these terms when it comes to the trading world. You're gonna hear all these terms. So you need to understand these terms and what they mean, so that you don't get confused when someone is saying bearish and bullish and bullish and bearish. All right. So they call this bullish when it's going up, and they call it bearish when it's going down. So the green candle is called a bullish candlestick. All right. And a candle that's going down is called a bearish candlestick. All right. And this is what they look like. So let me break down what it looks like for you. So now you can see this bullish candlestick. Let's go with the bullish candlestick first. The bullish candlestick has four main qualities or features. We have the high, we have the close, we have the open, and we have the low. So now the way this works is this open is where it opened. This is where the candlestick opened. So the candlestick opened. This low means price. This candlestick opened and went all the way down here to these points here, went all the way down there, and then went back up, right? It went down here and went back up, and then whenever it goes to a certain area on the chart and then goes away from there before the candle closes, that's when it's going to leave this stuff. Now this stuff is called a wick or shadow, right? It's like a footprint or a trail of where this candle has been, right? It's like a shadow, the shadow of, or let's say shadow, or let's say skeleton. No, no, not skeleton. It's like a shadow. Some people call it shadow, some people call it wick, right? So it basically shows you where price has been, right? So this opened here, went all the way down here, and then went back up, went up, 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 went all the way up here, and then came back down, and then closed here. So that's why you have this is the open. That's where it opened. It went down from these lowest points, went back all the way up, went and from these highest points, and then came back down and then closed here. So whenever the candle closes, that's where you're gonna see it's like this, right? And the reason why it's bullish is because it's closed above where it opened. So it opened down here and closed above where it opened. So that shows you that price went all the way up, right? So if the market, let's say, let me put this in realistic terms. Let's say the market opens here at this price. Market opens at this price. And then it went up, it went up, it went up, went up. And then at the end of the day, it closed here. That means that was a positive day. The day was positive. So if the day is positive, then that's going to give you a blue or a green bullish candle, right? That's why the color is green. If it is down here that it closed, it's going to be red, because the red is basically the opposite of this green. So let me explain the red so you can understand. So you can see where this opened is actually where this one closes, and where this one closes is actually where this one opened, right? It's the open and close that makes it the colors, that makes it, because if price closes above where it opened, it's going to be a bullish candle. If price closes below where it opened, it's going to be a bearish candle. So why is a bearish candle and why is red is because price opened all the way up here. The candle opened all the way up here and went down and closed all the way down here. It formed this low. Remember, this is where price has been, and then went back up, right? And then this is also where price has been, and it came back down and then closed down here. That's why it's red. So this one opened all the way up here. This one opened all the way down here. And that's why it's a red candle. Because it's basically giving you data. The color gives you the data. It shows you that, okay, price went off from up here to down here. That's what it tells you. That's the data. That's what you're looking at. It's not just artistic, whatever. It's not just art. It's showing you, it's giving you data. So you have to be able to read this data to understand what's happening on the charts, because it's very difficult to start looking at the prices and start saying, okay, what price is this? And then, oh, minus this. And that's the old way. The way we do it is this image shows us everything we need to know on what price has done, right? So the bullish candle shows us that price closed and price went up. Price basically went up. That's what it tells you. And then the bearish candle basically tells you that price went down. So from the colors, you know that, okay, this price went up at this point and price went down at this point. So when you see something like this, that's basically price going up and then price coming down. It's going to show in kind of candlesticks, right? So that's what it looks like. So this is what it looks like on the charts. This is when you have multiple candlesticks joined together. So you see these green parts, multiple green candles. So that tells you that price is going up at that point. Then these multiple red candles, price is going down. See these red candles. Whenever you see the red candle, you can see prices going down, prices going down. And whenever you have green candles, that's when you see prices going up and prices going up. So that tells you that price is going up. So if you look to the right hand side, you can see these are the prices. I'm sure this is a JPY pair. That's why it's like this. And if you look here, yeah, that's a JPY pair. So you can see how you have the 3 digits here. Remember, I told you how JPY pairs usually, this is how they are. This is what they look like the price, right? So these are the prices. Prices moving from one place to another. If it's going down, that's going to be red candles. If it's going up, that's going to be green candles. So that's what it tells you. So basically, without looking at these prices, just looking at the charts, you can see, okay, price went all the way from up here and price went down all the way down here to these points and then reversed from these points and started going back up, right? So that's basically how it is. So now market structure. The next thing that you need to also understand is market structure. Market structure is basically the structure of the markets, how the market moves, up, down, sideways. Price can only move in 3 directions to the right. So price moves from the left to the right. Price does not move from the right to the left. Always and always and will always move from left to right. And it can only move in 3 directions. Up, up, down, and sideways. Those are the 3 directions that price can move. And whenever price is going up, that's called an uptrend. Price is trending to the upside or is bullish. Remember, bullish means going up, right? Bullish means going up. Always remember that. That's why I told you need to understand this term so that you don't get confused. Downtrend is when price is trending to the downside or is bearish, right? That's the bearish candle, bearish trend. So an uptrend is going to look like this. Price is trending to the upside. And the downtrend is going to look like this. Price is trending to the downside overall. Consolidation is basically going to be sideways like this. It's going to just be flats, right? That's sideways consolidation. Consolidation basically means sideways. Accumulation, consolidation, accumulation. Consolidation doesn't always mean sideways, but it means like chop, like consolidate. Like, basically this is English. Check your dictionary. You're gonna see the meaning of consolidation or accumulation. You're accumulating something or you're consolidating something together, putting something together or something. All right, so price is going sideways, neither up or down. It's not trending to the upside and it's not trending to the downside. That is consolidation or sideways movement or accumulation. So when you hear these terms, that's what it means. Uptrend, downtrend, and consolidation. So let me just show you an example of what it looks like on the charts. So you can see price is going down. So what do you call this? This is called a downtrend. So now as price is going up, this is called what? An uptrend. At this point here, when price is just going sideways, here like this is called consolidation. So these are the only ways that price can move, either up, down, or sideways. Now, this is what it looks like again. So you can see we have this uptrend, and then this is sideways consolidation here, and you can see downtrend. This is what it looks like. Pay close attention. So snap it in your mind. This is what it looks like. So I created a free mini beginners course where you can learn more. So there's a playlist on my page, on my YouTube channel. There's a playlist that goes in depth on all these concepts and all this, and even gives you more information on how to trade Forex as a complete beginner. So if you go to my channel, you can check the playlist section or on my YouTube channel. You can check the playlist section. You're gonna see it there, Forex Beginner's Guide. Or if you're too lazy to go and check it by yourself, you can just check the link in the description below, or maybe it's gonna be on your screen as I'm talking right now. So also, if you like this video and you found this video helpful, make sure to like and subscribe. And if you have any questions, let me know in the comments, and I'll see you guys on the next